All right, let's jump into our daily trade review here, and we're going to be looking at ticker symbol TDOC, TDOC. Uh, when it came up on the scanners yesterday, right there, and we'll zoom in just a minute, but at that little red candle right there is where it came up on the scanners at the end of the day yesterday, and I began looking at it, and it was pretty obvious as soon as you pull it up. You can see this bottom right here. We'll go ahead and draw it in. Got a really good, or we're bouncing at a really good level. It's a level that's been tested previously, and it is also the 365-day lows. And we'll zoom in on this, but as far as looking left and everything, there wasn't really a lot to come into play. I mean, maybe if you wanted to, I did do this, and it was not in any conflict. This trend line here, there's that one there, and I'll leave it there for just a little bit. That was really the only form of resistance overhead that we had to worry about. And then the only other thing that I drew in at the time was right here, right in there, just to see if it would come into conflict with entering this trade, and it did not. So our signal was right there, and we were bouncing at a really good level. This was a valley to river setup, as we refer to it, Armor Trading Systems. We can see it's got plenty of room up to the 50 SMA. Here's the 200 up here. And we're bouncing at this a really good level, 365-day lows. We see it's every time it's come at this level or near it, it has wanted to bounce. So I felt pretty good about taking this trade long if it were to trigger. Now on this one, our trigger, we needed to see the break of 32.34, and it did that. I believe it was fairly quickly. And we'll jump into the 1 minute in just a second when we start going over exits strategies. So you'll see when it happened exactly. But 32.34, that's the break we were looking at. We got that. And that's part of the beauty of the system that I teach and that I've created, is that once we have everything, we've created our watch list that I send out every night. Next morning we go over it, we talk about our entries. The entries are very self-explanatory, especially if you have taken the Income Genesis course through the website. It's the trigger. The entry is what I call the trigger, or when we're triggered, when we are kind of notified to enter the trade. And they are very cut and dry, very self-explanatory, very, very straightforward, super easy to understand. So when it triggered, everybody that was trading along with me should have been on the exact same page as far as when to enter. Now, the only thing that comes into question is, when do you exit? When do you exit? Because everything else is laid out in front of you, and it's pretty easy to follow. The exit is going to vary from trader to trader. Now we'll go over a few different exit strategies here. The first being and these aren't the only exit strategies. I'm just going to go over three to give you an idea of how you could possibly exit these trades. The first one would be if you it's kind of an either or thing. Either scale out into previous resistance, or just exit out completely as soon as it gets into a previous resistance level, and vice versa if we were playing a bearish trade here. So our entry is right here at right around there at 32.34. Now for me, and this would be really picky, trying to get something a little closer to the entry, was this level right there. Oops. Let me get the price level back. This level right in there. You can see, especially right through here and here and here and right in there, that area, or around 33.4, 46 or 36, excuse me, was a pretty decent level. But again, that's being really kind of picky. The better one would have been up here, which it never got to, so it's kind of irrelevant. And it's also a long way away from the trigger. So if you wanted to scale out or exit into a previous resistance on this particular trade, this would have been a decent level to take your profit at or exit at. Past that, it never went much higher than that, so you really didn't have to worry about it. Now, if you did choose to scale out and you scale out some there and you're still holding it, you got a couple options. Number one would be to, after you scale out, you move your stop, which again we go over in the war room each morning. Move your stop maybe all the way up to your entry so that you know you're not going to lose money on the trade. It's just a matter of how much money are you going to make. You could do that, or you could just hold it till the end of the day, see what happens. And that is the other strategy, another exit strategy that we'll go over. And that is simply when it triggers, you enter, you set your stop based on what we go over in the mornings and what I teach in the Income Genesis course. Set your stop and close it at the end of the day. This is a great way to catch some really big runners. It does happen from time to time where we'll get a big volatile move throughout the course of the day, and it really pays off. On the flip side, what you have to be prepared for is that sometimes doing that strategy, winners will turn in to losers. You just got to be prepared for it. It's just part of it, part of holding a trade all day long. It can happen. Now, if it does move up, when it did move up, you always have the option to move your stop so that you don't lose money, or if you're up, a good bit of money, say if you're watching it when it was near the top, you could move your stop even up so that you know you're still going to profit some. It's just a matter of how much. But that is an exit strategy. And if you take the Income Genesis course, you'll see at the end of it that I go over, using that strategy, I go over some win-loss ratios. And it's pretty shocking how well that simple strategy can work, of entering when it triggers and just holding and closing at the end of the day. So that's another exit strategy that you can use. A third and final would be probably what is most appealing, especially to new traders, and that is scalping. We'll go ahead and delete that line. And I say it's appealing to new traders because it is. The idea of making money in a few seconds to a few minutes, that is exciting. That's appealing. So I get that. I personally don't usually trade that way. Sometimes I will. Usually I don't, and it's just not my style. It's not what I'm good at. But I definitely see the appeal, and I understand it. I get it. So we'll go over the exit strategy here. So again, the entry, we were looking for the break of 32.34, which was right in there. And it went up just barely. I mean, less than 10 cents. And then it pushed down. It kind of just teetered around a little bit. It did come down, and you would have been about 25, a little less than 25 cents in the hole at this point right here. Now, this is the key to being a successful trader, is managing your losses and managing your stop loss and your risk reward. Now, I would not recommend ever taking a trade and only having a 20-cent stop loss. That's not good trading. That's way too tight. Unless the stock is a very slow mover, then that's a different story, but that wasn't the case here. So there's no reason why you should have been stopped out on that move. You just would have been down for a brief moment. And then you can see it did pop up, and it came up all the way up to 32.82, which was almost 50 cents above our entry. Now, if you're a scalper, that's fine. That is a really good move. Fantastic move, fantastic trade, and it would have worked out great for you. Or if you could have held it and, could have called an even bigger move. The point is that scalping this trade, as long as you did not have too tight of a stop loss, which I would never recommend doing, if you have a really tight stop loss, you need to consider taking a smaller position size so that you can afford a little bit of chop and a little bit of movement against you. before it continues and proves your theory and thesis right. So this was a pretty good trade all around, no matter which direction you chose, no matter which exit strategy you chose. This would have worked out great. Would have been a fantastic trade. It pushed up quite a bit above the entry, and then it even closed, 40 cents above the entry. And even scalping, we just went over that. It would have been a good trade. So that about wraps us up. This is key thing is just when it shows up on the scanners, do some sound and concrete technical analysis, and we go from there. And it shows up on the scanners for a very specific reason, and not all trades are exactly the same. Not all trades that show up on the scanners get traded. This one did because it met all the criteria that we are looking for, and it worked out great. So thank you for watching. I hope you enjoy this video. If you like it, please like, share, and subscribe. It would be very much appreciated. Thank you for watching. God bless.